Hello and welcome to another video about technical analysis tutorials. Today we want to take a look at the Fibonacci Retracement tool, what it does, how you can set it up, and how you can also use it to identify extension levels. That means price targets. So we are going to take a look at all of that. Before we start, I'm using the application TradingView. You can use it yourself as well. I mean, you can do that with any tool, really, any chart analysis tool, but I'm using TradingView. And you can use it for free, but if you use it for free, you are a little bit limited in terms of the different time periods that you can select up here. So I'm on the 4-hour chart. I think some charts are not available, and also you're limited in terms of which or how many indicators you can actually use on one chart. But for the beginning, it should all be good. You can use it for free. So when you set up your Fibonacci retracement tool, first of all, you have to select here on the left-hand side Fib retracement, and then Alt and F is the shortcut, but you can just select it here. And to set it up, first of all, we just drag it anywhere. And to set it up, then you have to select it on settings. So I've changed the color here a little bit as well to match the dark background, but click on settings. And these are the levels that I'm using. I've selected trend line white color because I'm using a dark themed background. I've got extend lines to the right, but you can also extend them to the left if you want to, but that has worked for me. And these are the levels that I'm using: 0, 0.382, 0.5, 0.618, 1, 1.618, 2.618, 1.382, 1.272, and 2. And these are also then these above 1 levels, they act as extension levels. And then I also select reverse because I use the retracement tool to show me extension levels. That means price targets, potential price targets. And one reason why I like the Fibonacci, I mean, I don't always use it. It's a bit a hate-love, you know. I like it because if it works, if the price respects it, then these levels can be really accurate. But then on the other hand, it also can be a bit subjective where you use it. So it is always very important when you use it that you need to, when you use it for the extension levels, for example, that you make sure first that the price has respected these levels when a retracement took place. I'm going to show you that. I like to use it also because a lot of the, there are a lot of bots that are trading. So people setting up bots and these bots oftentimes are based on Fibonacci levels, and it seems to be quite easy to program these bots. So with the Fibonacci levels, so that is why they can sometimes work pretty well, because there's a lot of bot and automated trading going on. So that is why they oftentimes work. But again, they don't always work. It's never a guarantee, but they can be pretty accurate when you make sure that a retracement has taken place and that it that it has respected the retracement levels. So let's take a look. The way to use it is, first of all, there are two ways. The first way is to identify potential retracement levels. So the way to do that is, let's start from scratch. You select the Fibonacci retracement tool, and then you have to identify a local low, so a swing low, one that really sticks out to you, like this one here. And then you have to start at the lower end of the lower shadow, which is here, and then you drag it up until the 1 level of the Fibonacci tool matches the upper end of the higher shadow, the upper shadow of the local high. So, and then that's pretty much it. Then you can, first of all, let's just assume we are here currently, and you want to know how long, or when is it possible, how long will the price potentially retrace? So you've got a beginning retracement, you can see a red candle. So you want to know, if it retraces, how far can it retrace down? One way to do it is to take the Fibonacci levels into account. You can also combine the Fibonacci levels with support and resistance levels from former support and resistance levels, but Fibonacci tools sometimes works really well. So two important retracement levels are these three here: the 0.382, the 0.5, and the 0.618. And what we can see that this retracement really very well and very accurately went down to the 0.5 retracement level. Whoops, I need to delete that. So it really, that lower end of that shadow here, that really hit the 0.5 level. And from then on, it went up, and it actually went up to the 1 level again, so the high here. And let's just see what happened then. It then went up, and we had the first level, the 1.272 extension level, so the first price target level, acting as a resistance. We broke that. We then actually went up to the 1.618, and surprise, the 1.618 acted again as resistance level, and we then actually broke even that, and then it actually acted as support level here. Again, it was tested, acted as support. The candle closed very, very accurately at this 1.618 level, and then there were a few retests and went down to the 1.272 level again, and again that 1.618 level then acted as resistance, broke that again, and then we had it trading above the 1.618 level, which then acted as support. So we've been trading within this 1.272 and the 2 level actually for a while. This was really then a channel, and this really accurately shows how these extension levels can also predict future support and resistance levels. But what you need to make sure when you use it to identify extensions, you want to make sure that when a retracement happened, that this retracement really was very close to a Fibonacci level. If it wasn't, if for example it would have landed, or the correction or the retracement would have ended here somewhere between the 0.5 and the 0.382 level, then I would think that this Fibonacci is questionable. It's not really respected by the price action, and then potentially also the price targets or the extension levels will not work. So that's one way of doing it, and you can do it the other way around as well. If you have a local high here, yeah, and you want to go the other way because you think you're in a downtrend, then you go to the local low here, and we can just try that. Let's just try it the other way around. Let's see if it worked. So we start here at the top, drag it to the low here. So you then wanted to know, then the retracement happened, and we can very, very nicely see that this retracement went down to, or went actually up, yeah, but it retraced back to the 0.382 level, because the top wick here, the top shadow, the upper end of the top of the upper shadow really retraced back to the 0.382 level. So it works both ways round. If you're in an uptrending market or a downtrending market, both work. Let's take a look at another example. If we just go to the next, maybe the next one here. Just make that a bit clearer. Zoom out a little bit. So maybe we start here. Let's just see if that one works. And the earlier you start in a trend, the better actually, but let's just see what is happening. So we start here again at the lower end of the lower shadow, go all the way up until the 1 matches the upper end of this upper shadow. Retracement levels here, we can see very beautiful actually how this 0.5 level again, and by the way, the 0.5 is a very popular retracement level. I zoom in. How the 0.5 level really acted as support here 4 times on 4 candles. Well, actually 3 times. The 4th one then retraced back down to the 0.382 level. From then on, we went all the way up again. And we had again, for example, the 1.618 level here acting as support. We had the 1.272 level here acting as resistance. So this works. This is how you can use it. And for me, the most or the best extension levels that oftentimes work out are the 1.382 and the 1.618. Rarely it really goes up to the 2.618, but apparently here it did. You can clearly see that. So very accurately, really great way of how to use the Fibonacci tool. It actually really accurately tested the 2.618 level here. So it just shows that the way this extension tool is set up with the indicators that I've given you can really work very well. That's how I've used it with success. Bear in mind, if it doesn't match, if you get a retracement and it doesn't match and you want to use the extension levels and it doesn't retrace anywhere here, maybe it goes down too far or lands, in the middle of the 0.382 and the 0 level here, then the price action doesn't respect the Fibonacci retracement tool, and then I wouldn't use it. But then, for example, you could test it at another swing low, another wave, because sometimes you just have to test different waves. Sometimes it just doesn't work. But if you do that test of the retracement first, then it can work really well if it's accurate to predict possible price targets. So this is how you can use the Fibonacci retracement tool also, first of all, to identify retracements, but also to identify possible price targets, the extension levels, and again, very important retracement levels are the 0.382, the 0.5 and the 0.618, and extension levels, the 1. You can just draw it again, just show it to you once more. The 0.382, the 0.5 and the 0.618 important retracement levels, and the 1.382 and the 1.618. These oftentimes work as possible price targets. Rarely you get it to the 2 or even the 2.618. Right, I hope that video was useful. If you liked it, please smash the like button. And if you want to follow me on this trading journey, this technical analysis journey, then please subscribe. Also leave a comment in the comment section. That helps the channel, helps the algorithm to make this knowledge more popular. And yeah, see you in the next video. Thanks a lot for watching. Bye.